There is a lot to do, a lot to discuss. We can also look ahead to where we go next year. Guy Dummy, great to see you. Happy New Year.
To you.
Got a New Year haircut, a new cut, new you.
Yeah. Well, it's the same me.
It's the same you. What do you see for next year?
Always great to have you here. It's fun to come into Times Square on New Year's Eve. What do I see for next year? Does volatility come back? I think April, well, I shouldn't say a lot of people, definitely surprised me by how quickly the market recovered from what was a pretty significant sell-off and a volatility event that we hadn't seen in many, many years. That surprised me. I think we're in for another type of volatility event in 2026. I can't tell you when. I think it's going to be early. I also think the bond market is something that not enough people are paying attention to. So very quietly, TLT selling off, yields going higher. I don't think the market cares until we get to about 4.5% in the 10-year. But I think we're going there. And I also
think so. 4.5%.
I do. Now, I'm probably the only one here that thinks that. But
well, let's talk about it because, by the way, that was not music to the ears of a lot of people out there hoping to buy a home in 2026 because mortgage rates largely tied to that 10-year Treasury. Sounds like Guy Adami might think mortgage rates could be going up, not down.
Today on our call at 12:30 that the 30-year yields are as low as they've been in quite some time, which is the good news. I think the bad news is I do think 10-year yields go higher for a number of different reasons that we've talked about on this desk, not least of which what's going on globally with interest rates and obviously a global debt problem and this de-dollarization thing. I also think in terms of home builders quickly, as much as about interest rates, and we talked about this last night, it's equally about the employment situation where I think it's going to deteriorate next year as well.
You know, it's an interesting point, Dan, about this year because you referenced last night, you talked about OpenAI, and we can get into that a little more about what happens. We forget, though, what happened in April. 2 weeks, the tariff turmoil, markets collapsing. We talked about, how low does this market go before one of the fastest rebounds? Are you seeing some kind of, and by the way, it would be historically accurate to have one of these 10 or 15% drops?
Yeah, we get them every year. And that one was just a bit violent. And to Guy's point there, it was also that every risk asset went a bit haywire. And so that was one of the things that if you've been a long-term market participant, you don't see those sorts of breaks that frequently. We saw, correlations basically go to 1. And that's where some bad things happen generally in the market. So the likelihood of having another situation like that come all at once is probably not that great. But I think going into the new year, we obviously know where a lot of the performance came from this year, and we know why, right? We saw multiple expansion in a big way here. The expectations for earnings growth are, again, low teens, I think, going into 2026. And so I would just say that there's a strong likelihood that whether we're up or down, let's say in the first quarter, the first half, or the whole year, that the equal weight S&P starts to outperform the S&P 500. It almost doubled it up this year, the market cap weighted one. And I just think that if we're going to have legs to this AI trade, there's going to have to be some demonstration of return on the investment that a lot of these companies have made, the ones that have accrued most of the market cap, right, because of this sort of theme. And then it's going to be the ones who are purchasing this technology or building on top of it, if you think about this kind of application layer there. And so to me, I think that's where the opportunities are going to be across lots of different sectors. Caterpillar was a name that we also talked about on the 12:30 call. They have this power business. It's growing really fast. It's 50% of their revenues in the last quarter. If you go look at the stock, you look at the chart, it looks like one of the semis that is selling these sorts of GPUs. So to me, there's going to be stories like that. They're going to have to kind of take over, in my opinion.
Is that the second derivative AI trade, maybe third derivative AI
here's
trade?
a good example. JP Morgan doubled up the performance of the S&P 500. It's trading at a multiple it has not traded at a very long time. A lot of that, I think, is anticipation of them getting a return on the investments they've made, but also the fact that they're not going to have to hire as much. They're going to get better productivity. So those are some of the themes I think are working through the market right now.